various themes that have come to the fore, and of course the biggest issue right now, everyone's looking to Japan, the earthquake and tsunami that's hit there, and what kind of impact that's going to have on the market. Let's touch on the 15 trillion yen that has been flooded into the money market today. What kind of impact is this going to have?
Well, I think that it's creating some form of bottom in terms of what's, the market at the moment, very confused. Certainly the tragedy and the extent of the tragedy is something that's been foremost on everyone's minds, keeping in fact that it happened on a Friday and we had a weekend thereafter, followed by all this news that went through, the number, the death toll that went after that tsunami, and then obviously the concerns now around the nuclear reactors that are under threat. So I think that the market's very, very unsure of what the actual ramifications of this are going to be, and what the government in Japan has decided to do is to inject the money market with about $180 billion worth of yen, which at this present time I think it is the most prudent thing to do, based on the fact that there's a lot of cash flow moving in and out of that economy, and it's creating some form of stability, which is a positive outcome. And as you've seen, the markets haven't reacted that negatively to the fallout and the extent of the horror that's happening in Japan.
It's quite interesting, Brigid, that you mentioned that, because we're seeing repatriation of money back home. It seems a lot of investors liquidating their positions to bring money back to Japan. That could result in yen strength, something that the Bank of Japan is trying to do away with through various interventions. So you've got this flow of money coming through where they liquidate through quantitative easing, and then you've got repatriation of money back home. Who do you think is going to win when it comes to the yen? Are we going to see yen strength or yen weakness?
Well, I think at this point, initially you saw the yen strengthen quite dramatically. Once this injection went through, it weakened back up to sort of that 82 level once again. And you're seeing it trade relatively, despite the fact that like I said before, this is such a phenomenally huge incident, relatively stable. So that's been a positive outcome. I think that ultimately the outlook that they're looking for is more cash onshore. The bigger things that we need to look at are things like what will happen to the Eurodashi issue, what will happen to any debt that's been held offshore, and where that will, whether that will continue or whether that will be unwound.
It's quite interesting you mentioned that. I mean, we have had a lot of speculators coming up and saying we're going to see Japan liquidating their positions when it comes to US and Eurozone debt. Do you think that that is just speculation, or could it be a reality, Brigid?
Well, at this point, it is definitely speculation. I mean, at the ramifications of the outcome that we're looking at the moment, probably manageable without having to liquidate massive positions. But nonetheless, I think that if there's further fallout, and certainly if we do see continued, the fallout from these nuclear reactors, etc., continuing to create unease in that economy, I think that we potentially could see some form of unwinding. But I think for now, it's been relatively well contained. The bigger picture as well, keeping in mind that down the line at some point they're going to have to spend a lot of money on infrastructure once again, but then that will hopefully boost some form of employment in that economy.
Well, Brigid, I mean, bringing it back home, how relevant is it to the local currency and the performance of the rand going forward? Because despite all the tensions and the fear that has come through with the oil market and now with Japan, we've actually been stuck in a very tight range when it comes to the local currency and battling to breach that 7 rand to the US dollar level.
It's been very interesting. We've seen, what we've seen come out of the Reserve Bank, and certainly monetary policy-wise, around the currency, is saying that they want a stable currency, and they certainly are achieving that. If you think that the rand, despite all the fallout that we've seen either in the Eurozone or what we're seeing coming through from the East, has kept the rand relatively range-bound, and that's been very interesting. You've seen exporters coming in closer to the 7 levels, and then you've seen a little bit of mopping up of excess dollars in around that 685, which has created that very narrow band in a global economy that's relatively volatile. So that's been quite interesting, and I think that that will maintain. What you're also seeing on the bond market side is that you're having issuance, relatively narrow range issuance, and then in the shorter end and the longer end. So you've had those 213s, you're having 214s come through the market this week, keeping the markets also very range bound.
So does that mean more stability for the local currency? I never thought I would actually say that, Brigid.
It is unbelievably so. Our currency is very, very stable, and it's certainly, for an investor sentiment, it's very positive because you're able to manage your outlook in terms of where the currency is going, and your currency exposure becomes much less. So with the rand remaining within these relative ranges and certainly grinding lower towards stronger levels, it's not those huge historical levels that we saw in the past. And in fact, most global developed nation currencies are a lot more volatile than what we're seeing in our local units.
It's also interesting when you look at the euro-dollar cross, because that's pretty much on the flat line. We had good news out of Brussels over the weekend that the European Emergency Fund has been extended to around 500 billion euros. That should be net positive for the euro and, of course, those peripheral countries that have been paying a lot to raise capital.
Absolutely. I think that it was a very, very pleasant surprise. There were some very decisive decisions that were made. We were expecting them to increase the liquidity to 440 billion, but what we weren't expecting was formalizing the accumulation of sovereign debt in the primary market, which is positive for the likes of Ireland, the positive, for the likes of Greece, those peripheral nations that have caused that stress in the Eurozone and continue to be something that the market keeps in the back of their minds, that these are where the potential defaults will appear, or the cracks will appear, if anywhere. And what they're starting to do is plug up those holes and say, we will back this currency, we will back this economy, and we'll do whatever it takes to support it. So for the foreseeable future, there will be that availability of cash in the system, and then that draws into question, how soon do you actually think interest rates will be hiked? Is it too aggressive to assume that that's going to happen in April or in May? And I'm starting to think that potentially what we could have seen was some form of inflation management, but the action doesn't follow through in terms of what the words were that were spoken.
So, Brigid, going forward, we've established that you think the rand could maintain these levels for the rest of the week. We've got retail sales out this week. Is there any big headwind that the rand could face this week where we could see some pressure coming to the fore? What are you keeping a close watch on?
Well, the big drivers on the currency markets currently are definitely inflation and the outlooks for interest rates. So we've got FOMC this week. The United States are coming out with their interest rate decision. Across the board, expected to remain as such, but the interesting thing, and we always watch, is the post-FOMC statement. How many hawks are in the shop? How many want interest rate hikes a lot sooner than the rest? We're starting to see inflationary pressures globally. What does that look like in a US scenario? Because out of all of the developed nations, they probably are still the most on the back foot in terms of looking for interest rate hikes going forward. So it'll be interesting to see what their statements are post-FOMC. Secondly, we've got CPI out of the US. We've got the PPI out of the US, which will give us an indicator as to whether or not they're feeling those inflationary headwinds. We've also got sentiment indicators out of Germany, the ZU index, and then South African retail sales will show us how the retail and certainly how the consumer's faring in the South African market.